Well, hi, it's Carrie again from KDS Insurance Services. Today is a really good day to catch up on some videos that I have been meaning to do to help you. The one I'm going to talk about now is automobile coverage in the state of Texas. There is so much confusion, bless your heart, and I know it's confusing unless you are trained like I am. I've been in the industry for 43 years. It can be very confusing. The terminology can be confusing, what the coverages are, what's needed, what's not needed, what's required, what's not required. So we're going to talk about it today. First of all, in the state of Texas, if you own a vehicle that is roadworthy and on the road, you must have liability insurance. Liability insurance is insurance that protects the public from you. Okay? You get in your car and you have an accident and you run into me and you cause damage to my vehicle, or me personally, you cause pain and suffering and medical bills to me, your liability insurance is required. The state makes this requirement so you can pay for those resulting damages, and you can buy it in different intervals. The state of Texas mandates that you carry $30,000 per person, $60,000 per accident. That is medical bills and pain and suffering, $30,000 per person, or a total of $60,000 for the entire accident. This is for the other party now, remember, and then $25,000 in property damage. That would be property damage that you damage as the result of running into them or their property. Okay, so their property would be their car, a fence, a house, a pole, a gate. Anything that you run into that's property is covered by that third number. Now, here's a scenario for you. You run into a car. That car runs into two cars. And all of those cars are luxury cars. The first one is an Audi. The second one is a Mercedes-Benz. And the third one is a Land Rover. Now, you know all of those vehicles are worth more than $25,000 each. Let's say you take them all out. Yeah, you are at fault. It is your fault. You started the chain of events. You hit the back car, it hit the next car, it hit the next car, and then it hit the fourth car. So you have totaled 3 cars. If you buy the state minimum, the maximum your policy is going to pay out is $25,000 for all 3 of those cars. And you're probably thinking, what do you mean that's all? Yeah. $30,000 per accident per person, $60,000 per accident, and $25,000 in property damage is the state minimum. You can buy more. You can buy up to $1 million if you wanted to. You're going to pay for it. The minimum is $25,000. That's all your policy would pay. So if you're found liable for all 3 of those cars, the difference in what your policy would pay and what the judgment is comes from you. Comes from your liquid assets. Money in the bank. Money in life insurance. Money out of your home, of which they would lien your home. Money in stocks and bonds. Anything that is not secured in a retirement vehicle is subject to a lien, satisfying a judgment when you are found liable. So that's what liability is. It protects the public from you in the event that you run into me, cause personal injuries to me, and you damage my property. Okay? It's required by the state. The state wants to know that you can pay for some of it. And that's why the liability is required. The minimum is 30, 60, 25. The next coverage is uninsured or underinsured motorist. Now, here in the state of Texas, we have a lot of people driving around who don't have insurance. Have a lot of people driving around that shouldn't be here because they're illegally here. They still get behind vehicles. Now, if their vehicle hits you and it has no insurance, you can protect yourself from that by buying uninsured motorist. You are protecting yourself for pain and suffering, medical bills, and property damage by buying uninsured motorist. Same type of limits apply. 30, 60, 25, or you can buy higher limits. This protects you. It is not required. It is an ancillary coverage that you can buy to protect yourself from the person driving a car that has no insurance. Okay? Underinsured motorist is somebody who does have insurance, but they don't have enough to pay for the damages that they cause to me. Okay, so I'm injured and I have $80,000 worth of medical bills, and my vehicle is a $50,000 vehicle, and their liability insurance will pay $60,000 because that's the max in the minimum for my pain and suffering and medical bills, and if they buy the minimum, $25,000 in property damage. Now I can buy underinsured motorist for that same limit or higher, and then it's going to offset the difference between what that policy will pay and what my expenses are, and it would pay up to whatever limit I buy. So that's underinsured. I'm protecting myself against somebody who has insurance but who doesn't carry really high limits. Okay? Then we have two coverages that are similar. The first one is called medical payments. The second one is called personal injury. This pays as a result of an accident where somebody is at fault and you are injured. Okay? Medical payments and personal injury protection covers medical expenses that you incur while you are injured in a car accident. This is when it's not your fault. Okay? So medical payments or personal injury. The difference is personal injury will also pay for lost wages. So if you're working, you should buy personal injury protection. Normally it's issued at $2,500 minimum. You can buy more, and it will pay you for your medical expenses, and it will pay you for days off of work. Okay? It will pay you for lost wages. That's personal injury protection. Medical payments will pay you for the medical, but not for any time off of work. So that is the policy that a coverage that a retired person would want to buy if they want medical bill reimbursement. Personal injury protection or medical payments. Sorry, I needed a drink. Okay. Liability, uninsured motorist, underinsured motorist, medical payments, or personal injury protection. The only one required so far is the liability. Okay? And that is the only coverage the state mandates that you must have, the liability insurance. So you're probably thinking, well, is she talking about full coverage insurance? No, I'm not. Generally, full coverage insurance is when you buy liability, uninsured motorist, medical expense reimbursement, comprehensive and collision, rental car and towing. 7 coverages is generally speaking full coverage insurance. Okay? So why do you have to buy comprehensive and collision? Well, that's when you have a vehicle and you owe money on it, or you want to insure it in the event that it's your fault. Because your liability is not going to repair your vehicle. Remember, it's for me. It's if you hurt me. It's if you damage my vehicle. So, comprehensive is theft, fire, vandalism, hail damage, water damage, glass damage. If you hit an animal, These are all comprehensive coverages. They are required only by the bank if you have financing on your vehicle, because the bank wants to make sure if the vehicle is stolen, or if you hit an animal, or if it's flooded, or it has hail damage or glass damage, that vehicle is going to be repaired. Okay, put back to where it was as close as possible. Okay, that's comprehensive. Then the next coverage is collision. Collision is if you collide with something, if you back into your garage, if you run into a tree, or if you hit somebody else and it's your fault and you need to have your vehicle repaired, not the other party, because that's liability. This is your vehicle, and the bank requires this as well. Because if you damage your vehicle in an accident, they're going to want to make sure you repair the vehicle, right? Because they own it. This is collision. Now, both comp and collision are normally issued with a deductible. A deductible is the first X amount of dollars that you insure your vehicle for. So I generally don't write anything less than $1,000 because we're trying to help offset premium here. So you've had an accident, it's your fault, you hit a tree and your vehicle is damaged and you need it repaired, and it's going to cost you $6,000 and your deductible is $1,000. The insurance company is going to pay you $5,000. So you are insuring the first amount of payment called a deductible. You're deducting what the insurance company will pay you in damages. Then there is rental car reimbursement. If you're in an accident and you need a vehicle for the time that you're in the accident, rental car. It is not if you take your vehicle to the shop and need a rental car. It doesn't pay for that. It pays for rental car reimbursement as a result of an accident. Okay? Towing. Obviously, if you need your vehicle towed, if you lock your keys in the car, if you run out of gas, if you have a flat tire, it's called towing and emergency roadside service. Obviously, you've got an emergency, you run out of gas, they bring you up to the amount that you buy. Generally, I think the highest I've seen with any carrier is $150 in towing or emergency roadside service. And then you can buy a death benefit. So if you're killed in a car accident, you have some life insurance. Some carriers have that, some carriers don't. And then most of the carriers will offer you what's called gap insurance. This is a extra benefit that would make up the difference between what your vehicle value is and what is on your loan. Okay, so let's say you spend $25,000 for a vehicle and you have an accident in a year and it's totaled, and you still owe $22,000 on it, but the vehicle is only worth $17,000. That's a $5,000 difference. Gap makes that up and would pay off the loan. So you do not have a gap in coverage between what your vehicle is worth and what is left on your loan. This makes that up, so it's not your responsibility. You can generally get that when you finance a vehicle as well. In the state of Texas, if you have comp and collision on your vehicle, technically you have 14 days to notify your agent that you have purchased a new vehicle. It does automatically transfer to a vehicle. So if on a Saturday you decide to go buy a new car and your agent is not open, you show your ID card that proves you have insurance, and you then have 14 days to let your agent know that you've bought a new vehicle. If you don't have that coverage, let's say you don't carry comp and collision and you buy a vehicle on Saturday, you need to call your agent Monday and let the agent know you have bought a new vehicle and you need new coverage on it. In that case, you need to call immediately. I think that's about it. It's really important when you buy a vehicle especially if it's over the weekend, that you let your agent know that you've bought a new vehicle. You need to let your agent know if you have a finance plan on the vehicle. If you owe money on it, the agent needs to know that, because that will have to be written on the policy. So if your vehicle is in an accident and totaled, the bank gets paid. And that's about it. So here in Texas, one of those coverages is required. Liability for the state. The state only wants to make sure that you carry liability insurance. The banks want to make sure you carry liability, comprehensive, and collision. They want to make sure that you are protected, that you carry the right coverage, and that if your vehicle is lost, they're going to get paid. You are always required to carry an ID card, either on you, in your phone, or on your car. That is a ticketable offense. If you're pulled over and you do not have proof of insurance, you can get a ticket for that. And any vehicle, again, that is roadworthy, that is registered for the road, must have liability insurance. Now, there is a difference for classic vehicles, okay? And I'm just talking about personal vehicles right now. I'm not going to even get into commercial because it's way more complicated. But let's say you own a 1959 Chevy Corvette. You're going to need to go to a classic automobile carrier for that particular coverage. It has broader coverage and it is designed specifically for classic vehicles. Same principles, just a classic automobile carrier versus a regular standard carrier. One of the best is Haggerty for insurance, for example. Motorcycles have to have their own policies. RVs have to have their own policies. Boats have to have their own policies. Four-wheelers have to have them. Golf carts have to have them. An automobile is an automobile. Normally it is 2 to 4 wheels, and I say four wheels because I meant to say 4 to 8 wheels, because the bigger trucks, the dualies, do have sometimes 6 or 8 wheels on them. But I'm not talking about commercial. That is a completely different coverage. So there you go. I hope that explains it to you. Full coverage means liability, uninsured, underinsured, personal injury protection, comp, and collision. And remember one thing, insurance is designed to put you back to as close as you were at the time of the accident. It's never going to be able to put you back together 100%. It's not available. No insurance is going. Have a great day.